Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, y'all. Ira Epstein of Linn & Associates with your metals market update for this particular Thursday, the 3rd of August, 2017, just getting on to 3:15 p.m. Central Daylight Time. Interesting day. The news of the day is going to, of course, be all over the national news tonight, and that will be that Robert Mueller, the special counsel, has now impaneled a grand jury to hear more information about Russia and, of course, the campaign, President Trump's campaign, connections potentially with that. So it's moving on to another step. At first, it broke the stock market, but the market has since recovered. The gold market, which had a wild evening, got down to $1262.90, rebounded and made a new high on that news and has since settled back. It's going to settle today, at $1274.40. And the silver market didn't really do much of anything on that news, nor are you seeing a reaction in the dollar really to speak of, or the euro. So traders were scared. They were wondering what this means because, you know, you drop a hammer like that, and what does it mean for the presidency? Nobody knows. It's just another step in the investigation because the grand jury, then it has the power for even stronger subpoena records. The prosecutors or the investigators, both ways, get to see more information, and that's probably the natural step. So when we go to the gold market, I think you'd agree that you have a market that's caught between this area, and that's $12.95 down to the $12.04 area. You're now 2 weeks in a row so far up and over the 18-week moving average of closes. So the bias is up in the market. On an area chart of daily closes, you've gone from 1220.40 to 1279.40, and you've backed off today, and you're going to be down about $4 on the day, around 1274.40. When we take a look at a daily bar chart, I want you to look at this action and how you're reached down today. Now, let's go back, if we could, to the day that we had a outside day up, which is right here, and that was on Tuesday. What I did not want to see is the market take out Tuesday's low by today. And instead, it went through it, and it hit a rash of selling, driving the market down a fast $8 last night. And I think that somebody was trying to get out of the market for some reason. So you did put out a bull trap in the market. The only way to negate it now is making a new high over 1280. But the market's under the influence of that. So we'll keep that in the back of our mind. On the swing line, because of that action, you now have a lower low and a higher high. So you're out of a trend. The market still has itself support at 1261, the 100-day average, and marching up to it now, and you're only $6 away, is the 18-day moving average of closes. The question is, are you going to get a crossover, or is the 18-day going to come right to it and skid it? We're going to find that out probably no later than, I'd say, Tuesday of next week or Wednesday at the latest. As we take a look on the Bollinger Bands, the market is still fairly far away from it, and the significance of that is really simple. When the market got up to the Bollinger Bands, it moved to the right-hand side, slipped back. Didn't keep going at the band, and that is very typical. When you hit these bands, the odds of staying under them, be it or over them if it hits it, is only 5% of the time, and if you do it in succession, that number shrinks away. So this was okay. You hit it, and profits were made for some people, and now the market's trying to figure out what to do next. To me, the overriding factor is that the market's got a slow stochastic reading. Now, that could be given up, but it certainly doesn't look like it's going to be anytime soon with both numbers, even with the market just as it is, down $4 today, both in the 90s. So this market still looks good. I'd say that if you can get over that swing line high, watch out. That could be the number that gets you one part of it, and of course you get over 1280 and the game could really get interesting. But we take a look. Silver versus gold. The gold market is gaining in price on the silver. You're needing now more ounces of silver as this number goes higher to get 1 ounce of gold. The silver market looks weak as well, and it has lost its embedded reading. Now, when you lose the embedded reading, the odds favor that price and the 18-day average are going to come together. That from here is still approximately, 27 cents away from the day's low. It was about 7 when we got the sell-off in the metals, but you have lost the momentum. The only time you can get it back is tomorrow. So if there's going to be a strong metal day, it's got to be tomorrow to get this turning itself back up. Then you'd have a target of the combination of 1711 to 1703. You'll notice I'm not talking the bear side of the market because you're not under the 18-day average of closes. It's an objective, the 18-day, not the lower Bollinger Band right here. In the copper market, you still have that the slow stochastics going sideways, embedded. And that still keeps you with the higher lows, the higher highs, the bull trend, the bias to the upside. It's all here until that red line closes over 80, until it closes under 80. And when it does, I then will be looking for price in the 18-day average to make a potential run at each other. In the platinum market, you're trying to convert to a bullish reading. Now, you've got both numbers today in the slow stochastics right here over 80. Day before, they're both over 80, and the day before, you've embedded. So now on the pullbacks in the market, until that red line closes back under 80, I say the trade's going to be a buyer. A lot of people say it's overbought and so on. Nonsense. It's a buy until that is lost, in my opinion, at least. In the palladium market, the market got up and it's overbought. It refuses to embed. So while the market still has the pattern of higher lows and higher highs, it is overbought, and in order to work out the overbought, the market either goes sideways or drifts down a little bit to get out of that condition. So interesting day, but this market's not as strong as the palladium market, so the play is long platinum, short the palladium. Right? Makes sense to you? In the dollar index, still everything bearish. Now, tomorrow morning, we're going to get what? A very important jobs data report. And once we see that, we're going to see, did we get 180,000 jobs? Did the unemployment, is it 4.4 or 4.3? Those are the numbers being tossed around. But what we're all going to look at, I promise you, is there any wage inflation showing itself? And if there isn't, there's a problem. The OECD, for those of you that don't get my written information, the OECD looked at the G20. It sees no wage inflation. So it's through everybody that's in this G20. Same problem is happening. I touched on it yesterday saying maybe technology is to blame. Maybe we're just becoming so efficient in factories and manufacturing, if you will, that you don't need as many people for that. The service sector, of course, has its people, but even there, I can't help but think, you're getting more robotics to do things for people. How many times you go to your bank? You go to an ATM. You're not dealing with a teller. I was at my bank today, and there was one teller working at it. So I remember when you had 20. This is what's going on because of technology. And I just question, are we that not in tune to understand that maybe this is the new way employment runs? Okay, I don't know. And inflation because of it. You don't have to pay more money to that machine. So you've got your downtrend, you're embedded. We'll see if the market gets any action off of that tomorrow. And of course, where the market's going to tell you what's going on is in the gold market. Now, as you know, I've written my gold report. My subscribers already have it. Either today or tomorrow, I'm going to start sending it out to some of those on our mailing list. If you want to be certain that you're going to get it, go visit our website, www.iraepstein.com. Be sure to sign up for the gold report. That's one way to be absolutely certain you're going to get it. You can give us a call, 866-973-2077. I put in all those charts. You've got your price counts in there, monthly chart, weekly chart, daily chart, seasonal charts. I talk about everything from North Korea to what's going on with the chaos in the White House, where it fits in, and I bring it all together for you in a very interesting manner. At least I think I did. And this chart is focusing on right now. This particular report, the gold report I wrote on June 17th, was a longer-term analysis. So far, it looks pretty good still. So I'm Ira Epstein. Hope to hear from you. You have a great day.